Welcome back to the Energy Signal Podcast, Episode 3, your one-stop shop for the latest trends, policies, and market movers shaping the U.S. and global energy landscape. I'm your host, Josh Lefebvre, joining you from the energy capital of the world, Houston, Texas. We're recording this episode today on Sunday, August 17th. In this week's episode, we'll explore how energy stocks were mostly flat, but don't let that fool you. We'll see how a recent report actually stated that oil could slip below $60 by the end of the year. Trump's meeting with Putin in Alaska, that was big news across all sectors, and how the U.S. renewables are about to undergo a massive regulatory reset. If you're in the energy sector, this is an episode you can't afford to miss. Stay tuned. This episode of the Energy Signal Podcast is brought to you by StageTracker AI, the real-time frac intelligence platform that's powered by AI agents that help engineers and operators stay ahead in the frac game. Whether you're trying to optimize pump schedules, reduce NPT, or benchmark crew performance, StageTracker gives you the live view of what's really happening, stage by stage. No more waiting on the post-job reports to know if you're behind. Learn more at stagetracker.ai because every minute counts on the job. So coming up is our fuel and flow, which goes over the biggest market and stock movers of the week. We'd like to start this off by going over commodities. So based on our close Friday, August 15th, crude oil pretty much remained unchanged. It dropped by 0.32% and closed off Friday at $63.15. So really not much of a change there. Natural gas, on the other hand, that had a significant drop. So it actually fell below the $3 mark. It's down to $2.92, a drop of negative 2.44%. And a lot of this seems to have to do with, colder than expected weather here in the US. I don't know about you. I've lived in Texas now for 3 years. This summer, it's still hot. It's still Texas in August, but it's been nowhere near as warm this August as it has been for the last 2 years, at least from what I can recall. In other big news, big US players in terms of the stock market. So first up, we have ExxonMobil. They closed off their week at $106.49. A very small change of 0.9% decrease. So practically nothing there. Chevron as well. They closed their week off at $95.33, a 1% increase from last week. And then we have ConocoPhillips. They started their week off at $155. They closed their week off at $156.55, an increase of 1.51%. So overall, it was a relatively stable week in the energy market as a whole, which I'm not used to seeing, right? Based on all of these crazy news stories that have been coming up lately. But one thing that was very interesting is that I was reading a report from the Midland Times basically stating that the price of oil could fall below $60 by the end of the year. It hasn't been that low in quite some time. And again, this all seems to be the result of OPEC driving up production, right? And again, Saudi Arabia being one of the biggest players in OPEC, they more or less control OPEC, right? So they can basically tell, hey, OPEC, let's increase our numbers every week. And essentially what they're trying to do is they're trying to bleed out a lot of this US shale market, and they're trying to regain that market control, right? So the Saudis, they have so much money, they can afford to be bled out for quite some time. And obviously the big US oil and gas companies, the Chevrons, the Exxons of the world, they can afford that too. But, if this continues, a lot of these smaller oil and gas companies, they will eventually bleed out. And the Saudis, it's only a matter of time before they regain their market share. Our next segment is Deals and Drills, where we hear some of the biggest news stories, some of the biggest acquisition plays of the week. And without a doubt, the biggest story from last week was a meeting with Putin in Alaska. Now, it doesn't matter where you're getting your news from, this story was everywhere, right? And Trump at this time, he's looking for a full-blown peace deal. He's not just looking for another ceasefire. At the time of recording this, it's not quite clear what the outcome from that meeting was. If you recall, Trump had mentioned that any country that buys Russian oil would face further sanctions. The two biggest countries being, of course, India and China, right? And we spoke about those two last week. Now, One of the outcomes that has been confirmed, Trump mentioned that he would not be imposing any further tariffs on China for buying Russian oil. It's not clear why he said that, right? I'm sure this will develop over the course of the week. But that being said, India still has their 25% tariff in place. If you recall from last week, we mentioned that India has no plan on buying Russian oil at this time. Our next big story is that the Louisiana-based firm Venture Global, they won their arbitration case against Shell over contracted LNG cargoes, right? So this Louisiana-based company, they had the contracts in place for supply to Shell, BP, a bunch of the other oil and gas companies. And essentially they accused Venture Global of not delivering this natural gas, LNG for short, under their existing signed contracts. So instead of Venture Global selling that LNG to these and adhering to their existing contracts, instead they sold them on the spot market, where prices have been much higher. The spot market being primarily, Russia's invasion of Ukraine. Obviously, there's been a massive surge in demand, so they effectively broke those contracts and they were brought to court. And the judge ruled in favor of Venture Global. Venture Global stated that their penalties were up to $1.6 billion. This would have really devastated that company. On that news, Venture Global's stock shot up 6%. Another big story coming out is that U.S. power reached record highs in 2025 and is expected to continue to break records into 2026. This probably comes to no surprise to anybody, right? These massive data centers, the increase in overall consumption in both industrial, in commercial, in residential, this energy demand is going to increase. What was surprising is that the shifts in how this energy is coming through, right? So natural gas in 2024 dropped from 42% down to 40%. Coal actually ticked up to 17%, which was a little bit surprising. Renewables also grew to 26%. And then nuclear fell just slightly from 19% to 18%. But again, as more of these nuclear reactors come online, I'm sure that is expected to grow in time. Our next segment is we like to go over the renewables section. So wind, solar, battery powered, anything in the world of renewables. And this has been a really interesting market lately with, again, Trump's big, beautiful bill. And, we just continue to see all of these different deals and projects fall through based on the news of Trump removing a lot of these subsidiaries in the next couple of years, right? So one of the biggest stories is that ExxonMobil is actually either canceling or potentially just delaying their $7 billion Baytown hydrogen plant, right? So when Trump enacted the big, beautiful bill, it was really meant to bring back American coal, American fossil fuels. But I mean, we're definitely seeing some effects in the US. ExxonMobil, again, had this $7 billion Baytown low carbon hydrogen plant, and that was slated for 2027, 2028. But again, due to the market uncertainty around these federal tax rules, it's really uncertain, right? And Trump really mentioned that the big, beautiful bill would only be enacted, I want to say, any project that starts, I think it's 2028, right? So anything that starts before 2028 would still fall under that initial Biden ruling. But again, with funding expected to be pulled around 2028, it's just uncertain if this thing is even going to go through. ExxonMobil has really been pushing for contracts around hydrogen, ammonia, those types of exports to different markets like Asia, Europe. Our next story, and again, this very much follows suit with everything that's going on, but most of the big data center owners in the US are urging the U.S. Treasury to keep renewable energy subsidies in place, right? So I'm talking about the Amazons, the Googles, the Microsofts. They're all urging Scott Bessent, the Treasury Secretary, to keep current wind, solar subsidy rules in place. Trump is really starting to be a lot tighter around these clean energy credit rules. And he's just being overall a lot stricter. So the Treasury is expected to issue updates on the guidelines by August 18th. But with these stricter rules, we could see a massive cut in planned solar capacity. And at a time where data centers are thriving and consumption, what we just mentioned, consumption is through the roof. So, I mean, at the end of the day, it's the U.S. is just going to need more energy. And where that energy comes from, it just really doesn't matter. So it will be interesting to see how this shapes out. So really this week, headlines to watch out for are this Putin-Trump meeting. I'm sure there's going to be a lot of developing stories around what the actual outcomes were. If Russia and the Ukraine are actually able to find peace, what that will mean for the energy market as a whole. The other big thing is that, it's going to be interesting to watch the price of oil, right, as it's steadily declined week over week, and what will happen for the rest of the year, right, as OPEC continues to increase demand and as the Saudis continue to try to gain back that market share. We'll just have to see what Trump does, what the U.S. does to combat that, and what kind of new policies will be enacted. Again, thank you so much for watching this episode. I'm your host of the Energy Signal podcast, Josh Lefebvre. Until next week, stay tuned.